Hello guys, welcome to the Thursday forecast. So Thursday usually we get some moves, but this week it looks like we are slowing down a bit. This is expected since in the last week we did have a nice large trend such as this one. As you can see, we had a really nice move to the downside. So a little bit of a pause and a little bit of a distribution phase or accumulation phase, whatever you want to call it, is expected, and I'm not seeing much opportunities this week. So let me get right into what I'm meaning to say. So here we have the euro and the US dollar, and right here, so we got this nice push, small pullback, continuation, and then we got an aggressive retrace. So after we got this aggressive retrace, I was not looking for any sort of trades. Then we continued down, broke the low, retraced, left a huge wick, broke the high, retraced, broke the low, retraced. So this is signaling a classic range. This is a really common signal when we break the low, retrace, break the high, retrace, that we are ranging and that we will continue to range. This is what I am expecting. And what I'm being careful of is the liquidity areas that form above and below the range. So what I need to see a large push up and then I look for a trade. I need to see a large impulse down, then I will look for a trade also. What I don't want to see for the price to just break and retrace in the vicinity of the liquidity area. But if we start to descend, I will look for a reversal to the upside because it's high probability. And if we start to ascend, I will also look for a reversal, but to the downside. High probability setup this is, because when we ascend into the liquidity area, it means we are taking out people's stops, taking out stops, and then that we are most probably ready to reverse, because we have now got the fuel from taking out all of the stops. That is it for EU. Not seeing anything. Waiting for more, waiting for a clear impulse up or down. As I said, so this does look a bit like a descending, but it's not a clean descending, it's a more of a dirty descending. So if I get a nice big reversal, I will look for a trade. And if I get a nice large impulse down, I will also look for a trade. Since we do know that we can get a descending and then a impulse in the same direction on the euro pairs. But let's move on, this doesn't look good. The euro and the Japanese yen, so we did get a really nice move right here. Let's go over the prior price action just for a little while. So maybe some people were looking for a trade right at this point. I was too. We got a really nice push, pullback, continuation, but not enough of a push for me. It was a clean close, so that was good, but it was not enough of a push to the downside. I wanted to see more. Maybe some people then got in, break and retest on this level, this inside bar. But as I said, didn't fit my plan, wasn't enough of a push, and we got a huge wick right here. So a warning sign. When I see a huge wick, I want to see either a range or it signals a reversal. Then we broke the high, retraced, broke the low, retraced, broke the low, retraced, broke the high, retraced, broke the high, got some really nice momentum. So at this point, I was very happy to look for trades to the upside. I was seeing this large impulse coming from a reversal, so coming from a descending structure. But then what happened? It is very important to see what happens after the impulse finishes. So how the pullback looks, and we got an aggressive retrace. So this is a very bad sign. When I see an aggressive retrace, especially on the Japanese pairs, I'm staying out. I'm not looking for a trade. I'm waiting for the break of the low, or I'm waiting for the break of the high. So currently, because of that aggressive retrace, I'm staying out of any potential setups. What I'm looking for is that break of the high, nice push, break and retest trade, or a nice impulse, then a potential flag, or I'm looking for, if we start to ascend, looking for that reversal and a trade. If we start to descend, I'm looking for a reversal to the upside and then a nice trade. If we create a larger range at this level, so like this. Then I need to be careful about the liquidity areas, so same as on EU, not really going to repeat it. We need to see what happens when the price reaches the liquidity areas. Does it break and retrace, or does it break and give us some nice continuation? So yeah, that's about it for the euro pairs. Let's move on. So the Aussie and the US dollar. And the Aussie and the US dollar looks like crap. What would you say about that? Nothing really to say, because it's kind of expected. Look at this nice large trend. Look at this. And then usually what happens is we get this. So week after a really nice trend, we usually get this sort of crappy price action, not really showing us anything. There was one opportunity that looked promising right here. So I was seeing this descending structure. It wasn't a clean descending, but it still was descending. So what were some of the warning signs? That we were breaking the highs, retracing, breaking the lows, retracing, then breaking the highs, retracing right here. So not really a clean descending, more like corrective descending that is kind of not showing us any potential. But what I did like this nice reversal push to the upside. So if you take a closer look, let me mark out the descending, connect the move. So we are descending, 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 and then we got this nice reversal to the upside, which usually signals to us a trend to the upside. One thing that was a warning sign for me personally is that we had a huge wick, or maybe a large wick right here. So at this point I was looking for more of a range or a combo to my entry point. I was not looking for a straight retrace to a downside, because that just signals to me, when I see a large wick, it usually signals to me either a range or a reversal. So at this point I wanted to see that combo. A combo is a first part of the pullback, one pause, and then second part of the pullback. Much better than having a straight retrace to my entry point. The entry point would be this most recent high. So didn't have an order on, was waiting to see what will happen, how the next candle will form because of this large wick. And then we got this aggressive retrace. At this point this negated the trade for me. I don't like aggressive retraces on any of the pairs, and especially on the Aussie and US dollar. This was just too big of an aggressive retrace. Let's see how large it was. So about 27 pips. And yeah, I didn't have an order on. When I see a large wick, it usually signals to us a range or a reversal, and at this point we got a reversal. So it's good that I followed my plan at this point. What happened then? Well, we got a reversal. So managed to keep myself from a 1% loss, which is always good. And now currently I am waiting for the break of the low or the high. So we broke the low, retraced, got a huge wick. What I'm expecting is that we will get a larger range. Then of course be careful about the liquidity areas. But I'm not trading the range. I'm a trend trader, I'm not a range trader. What needs to happen for me to be interested in a trade? Well, we need to see a large push down and then a nice flag. Or we need to form a nice clean descending. I want to see a clean descending, and then I will look for a reversal to the upside. Same thing to the upside. Well, not really the same thing. If we do get a large impulse, I will look for a flag, but we also can form a V. If we form a V, then we can form a range, continue up, look for a trade. This is a very, very common pattern where we get a V, a range, and then we continue in the direction of the second leg. And then I'm looking for a nice trade. Also, if I get a clean ascending, a really clean price action, I will look for a reversal to the downside. And that's about it. So this doesn't look good. I need to see cleaner price action, need to see big moves up or big moves down. And since it is Thursday, there is still time for some nice moves to form until market close on Friday. Let's see what will happen in the next few hours. For the last pair, so the Aussie and the Japanese yen, also got some nice moves the last couple of hours. So it looks like the Japanese pairs are moving a bit. let me take this back. There was a trade right here. So we got this sort of a descending, sort of a corrective descending price action, not really clean, doesn't really look good, but I was liking this reversal. And then what happened? Well, we got a huge wick. At this point, it kind of negated the trade for me. The wick was too large and the prior price action looked like crap. So at this point, I was not really looking for any trades. Maybe if we got like a really wide range, I would consider taking a trade, but taking the prior price action into account, it doesn't really look good. Then we got an aggressive retrace, so it's good that I stayed out of this one. Would have been stopped out because I have a 12 pip stop loss on all the pairs. So very important to note that my stop loss is 12 pips on all the 4 pairs that I trade. So yeah, would have been stopped out in this case. And it's good that I followed my plan. There we broke the high, retrace, broke the high. Let me take this back one more time. So we got a really nice push. I really like this impulse. And at this point, I wanted to see that nice tight flag, something like this. So a flag is first part of pullback, pause, second part of pullback, and then we continue to the upside. Really simple stuff. A really simple pattern. So I was looking for a flag, but we got what we got. We got this aggressive retrace, and at this point I was not looking for any trades. Unfortunately, this negated any trade for me, since on the Japanese pairs, when I see an aggressive retrace, I'm staying out of any trades. I'm waiting for the break of the low or the break of the high. This would be the most recent low, since this is the first counter trend candle, and this would be the most recent high, since this is the top of the impulse. Looks like this will give us that V pattern that I'm always talking about, but we rarely see. I have to say, in the past couple of months, there has not been many of these patterns, as far as I can tell. So I'm looking for a V, I'm looking for a range, push down, and then a nice flag. Always being alert for that sort of a setup. I am expecting a larger range. That is what I am expecting. That is what has the highest probability to happen based on the prior price action. So if I see this, I'm not trading anything. I'm waiting for the break of the low or the high. Also, we need to take into account the liquidity areas. What I will be looking for is, as I said, that the V pattern and then a range. Also, we'll be looking for a large push up and then a flag. And a nice clean ascending. Reversal down, a trade to go short. Or a nice large impulse down, look for a flag, but it really needs to be large. Give me some really nice conviction. Or a clean descending, reversal up, and then a nice flag to go to the upside. That's about it for the forecast. As I said, market has not showed me anything nice. The Japanese pairs have moved, but then we got an aggressive retrace negating all of the trades. Let's see what happens when we break the low or the high, and I will see you guys tomorrow.